Friday, December 21st, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I'm going to look at the yen carry trade, the Japanese yen, and how that affects all the financial markets and what that yen carry trade means. I've spoken about that for the last few years. If you want to look at more of my videos, I've made several videos about that. You can just search, go to my channel on YouTube and search yen carry trade. You'll find loads of videos. I also want to talk about the technical pictures in the markets. Has the bottom fallen out of the stock market? Is this it? Are we going to see a total meltdown of everything? It is a possibility. And that's why and it can happen anytime, these things. Of course, people like me and the alternative have been warning people for years about the fact that after the crisis of 2008, the only thing they did was throw more of the problem or debt into the system to patch it up. They didn't really reform the too big to fail banks. They didn't reform the derivatives, the OTC derivatives. The leverage is still there. China has come in with a lot of debt. So it was only a matter of time. But one never knows. One never knows. But that's one of the reasons why you should always have precious metals insurance and physical, of course. Physical gold and silver, and that never changes. Even if the market, the Dow is making all-time highs today, I would still advise people to do that. So in a way, you don't have to worry about a collapse because you will be insured outside the system. What you don't want, of course, is to have too much fiat currency, paper money with banks. It's 7:40 a.m. London time. We'll look at what the markets are doing this morning. Yesterday, of course, was another bad day for the stock market. The Dow was down 464 points, closed below 23,000. That was down about 2%. S&P was down almost 40 points, 1.58%. And the NASDAQ was down 108. That was down 1.63%. So this morning, we've got gold that did really well yesterday. We were up over 1%, about 1.5%. The high was around 1268. We've broken through now the 200-day moving average for gold, spot gold that is. I don't look at the futures, I look at spot. This morning we're at 1261.40. That's up about $1.80. A range has been 1258.50 to 1263. Silver did well, but underperformed gold. The gold-silver ratio is still very elevated, above 85, but silver did fairly well. I think the key level still, and we didn't get to that level, is 1491. This morning we're at 1477, up about a cent. The range has been 1472, 1481. The Dow, after the close yesterday, it rallied quite strongly, and this morning it has stayed fairly strong. It's up 167, or 2/3%. Well, actually 3/4, at 23,014. S&P is at 2483.80, up 17, also 3/4 up. The NASDAQ 100 future, 62.95, up 55, just under 1%. Currencies did well yesterday against the dollar. They continue to trade up this morning, with the exception of the yen. Sterling is up, or cable is up 0.2% at 126.78. Euro is also up 0.2 at 114.66. Dollar is stable, unchanged against the yen, which I'll talk about in a minute, at 111.30. Dollar up 0.1 versus the yuan at 690. Crude oil still quite weak, 46.40 up 1%. WTI, and Brent is at 55.14 up 1% as well. Interesting yesterday, the bond market. I noticed that the 10-year yield dropped during the day to around 276. And then it rallied quite a bit towards the end of the day to like 280, which was weird. The reason it's interesting is when the stock market drops like it did yesterday, you do expect bond yields to drop and the bond prices to rise. But the market did rally a little bit towards the close, stock market, but it wasn't a reason for yields to back up so much. So we need to keep an eye on that. Yield curve is still 2s, 5s right now is flat actually, so it's not inverted at the moment. There are some headlines here about politics. Zero Hedge says Trump thanks House reps after passing funding bill with $5.7 billion for wall. So that might be giving the market a bit of relief. Just have a quick look at the markets then, at these charts. First of all, let's look at the S&P chart. I mean, we have now, and this is like a live, almost 24-hour trading. It's like the futures. So it's going to be a bit different than the index, but you can see that even the 100-day now is moving below the 200-day moving average. That trend line that I drew there, we're nowhere close to that. It doesn't look very good, does it? It doesn't look there's like anything there to support that market. It looks like a void. It's the Wile E. Coyote, analogy. We had those up and downs, in the last few months, down, up. That was Wile E., floating, in thin air before he dropped, and that's what it seems to me. Nothing different for the Dow. All the moving, the death cross has happened. The only thing we need to see now is the 100 cross under the 200 as well. And the Nasdaq, same story. Keep in mind is that there's not too many full trading days left in the year. We've got, Monday is Christmas Eve, and after Tuesday we've got another, 3 days. I think December 31st is going to be, New Year's Eve. That's going to be a Monday. So there's not many days left here. Things could get quite interesting. And now to the yen carry trade, which is something I've talked about for quite a while. All it is in the foreign exchange markets with the major currencies. A carry currency is a currency where investors, speculators will borrow in that currency. So they'll sell that currency. When you sell the currency versus the dollar, you borrow that currency, and then you take the proceeds in dollars and you speculate and you buy riskier assets to try to make a bigger return, because dollar provides higher interest rates than yen. And the yen historically has been the carry trade. You could use the euro as a carry trade, but it works well when that currency, the carry trade currency, is going down against the dollar, and while its interest rates are zero or negative or very low. But when things turn around, when that currency starts appreciating, even if the rates haven't changed, speculators are going to have to close out those carry trades, because their cost of funding is going to go up, because they're going to have to buy back the yen more expensive, and it's going to wipe out all their profits in the other currency. So this is what, and this yen carry trade was accentuated towards the end of December 2012 with Abenomics. Abenomics was advocated by Shinzo Abe when he became won the general election December 2012 in Japan. And what is Abenomics? Well, Abenomics, according to Wikipedia, is based upon 3 arrows of monetary easing, fiscal stimulus, and structural reforms. And I'll show you how it affected all the markets, and especially the yen. So here's the and this is the dollar against the yen. So whenever the chart goes up, it means the yen is going down because the dollar is going up. I know it's confusing foreign exchange sometimes, but the first little circle, shaded circle, that was when the great financial crisis really kicked off, and you can see that investors had to close out their carry trades, and the dollar was above 120 against the yen, and then it bottomed all the way below 80 towards the beginning of 2012. And then at the end of 2012, you can see there, Abenomics was announced. The Japanese central bank got involved as well, cut rates, QE, Japan threw the whole bathtub into making sure that the yen became weak, that rates were negative, that there was QE. So you see that chart going up. That means the yen dropped, from the beginning of 2013 all the way to beginning of 2016. So the dollar rose from around 75, let's say, all the way to 125. So that little shaded circle there end of 2015, beginning of 2016, that's when gold bottomed, because the other thing it affects is precious metals, because when people are loading up onto the yen carry trade, volatility goes down, everything's great in the financial markets, and that's negative for gold. And that's why gold also had that period where it dropped massively from around 1600 to 1045, so that gives you an example of what the yen carry trade does in the long term. In the short term, I just wanted to show you now what's happening this week. You can see there the big drop in the dollar. So that means the yen is appreciating, and that's not good for risk assets. And that makes sense with what's happening in the markets. And you can see that shaded area again there. When we bottomed also in the summer of 2016 in the dollar there around 100, that's when gold went up to 1375. So you can see that we do need to see the dollar drop against the yen to see precious metals continue to do well. And to end it, I just show you this long-term chart of the Dow weekly. And you can see the little shaded circle again. That's when Abenomics was announced. And it's interesting that the takeoff in the stock market really started around that that period of time when that was announced. Yen carry trade. So we need to keep an eye on the dollar. If the dollar continues to drop against the yen, that's a bad sign in my opinion. Of course, there's a lot of other signs out there, but that's an important one that I wanted to remind my viewers of. Many of you probably who have listened to my videos or been subscribers for a long time already probably know about it, but I just wanted to update the new subscribers and viewers about it. If you enjoyed this video, make sure you give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. I'll talk to you later. Take care. Bye.